Welcome investors, and thanks for joining us for the forecast where we decipher the markets so you can be in the driver's seat of your investments. I'm Jake Ackerman. A continuation in the decline in the stock market, energy starts to decline, and interest rates spike. This is all following a higher than expected CPI report released on Wednesday and a higher expected PPI report released this morning. And PPI is the producer price index, so the folks that sell the goods to our distributors have been raising their prices as well. So folks, if we rewind a little bit last week when I discussed the CPI report before its release, so that expecting it to be a little higher than expected is typical. Nothing goes up in a straight line, nothing goes down in a straight line. Stocks don't go up forever, they're not going down forever. There's webs and flows. So seeing a little rebound in the CPI and kind of inflation for a month is to be expected, all right? And there was another little dynamic change with the reporting and how the metrics, and then they decide the data on CPI. So CPI, the Consumer Price Index, is made up of a lot of different statistics of the costs of goods. So your energy prices, your housing prices, your new homes, your used cars, your rents, all conglomerate of data, and that's how they calculate the CPI report. Well, they changed the metrics, interestingly enough, and from going through it, and what we're seeing is that the metrics change makes inflation appear a little bit higher now, but they made the metrics be more focused on lagging inflation data. And what I mean by that is the lagging inflation data is the points, the services, and things like that, housing, that are sticky right now. They're higher right now, but are still coming down just a little bit slower level. And then you have your high flyers, your energy, your commodity prices that had a higher weight to it are starting to come down a little bit, or that the weight's coming down. Those high flyers are starting to spike back up, but the lagging data is still coming down. So you have this more focused on the lagging data. So as things progress, the year progresses, even if the commodities are spiking, the lagging data, which now has a higher weight, is coming down still. So that's something to pay attention to. Is that manipulation? Maybe, I don't know. Do they strategically do that? Those are great questions to ask, and I'm not sure on that. I'm just letting you know a point and a piece of information that we've seen. So what's coming up next week is FOMC minutes on Wednesday. That should give some clarification into the minds of the Fed officials. And then again, it's not this week or this month, it's the last meeting. The previous meeting is the minutes, and again, it's a detailed report on that. Last meeting was February 1st. So we should get some good insights on there. And again, we talked about the markets not going up in a straight line. We had a killer January. Markets really rallied. February's been more lackluster. It's been on its way down, which is seasonally typical anyways. We had a good January. It's followed by a more of a sell-off or a weaker February or March. And I guess we're seeing a weaker February right now. And we're not down yet to some really good price areas. Some of them are okay prices. You got to go out picking, but an overall broad market, I'd like to see it come down a little bit further to really get a nice opportunity. And do we get that in February or March before the next Fed meeting in March, middle of March? I think it's highly possible that we do, and we're going to start nibbling and making some strategic investments at that point. So what else do we have to look forward to on next week is PCE, personal consumer expenditures data, more inflation data rather. So should have some interesting data releases next week that we will absolutely take a look at, highlight, give you our feedback on it. So again, join us next week after this data, and we will discuss it and discuss the ramifications of it and the opportunities that we'll bring from the data. Expertise you deserve, experience you can count on.